In today's episode, we're going to be covering what is the NACA Loan Program. To help us with that, we have Ivonne Navarro with Rise Real Estate. Today, we're going to be answering the questions: what is the NACA loan? Who qualifies? What properties qualify for it? How much down payment you need? Is there any benefit to the interest rate? What type of credit score? What's the pre-approval process? This is an episode that you want to watch until the end. It's going to be an all-inclusive program, or an all-inclusive episode on just the NACA loan. So Ivonne, what is the NACA Loan Program and who qualifies for it?
Hi, I'm so happy to be here. So the NACA Loan Program is a program to help first-time home buyers to get their home without a down payment. And it has a bunch of benefits that we'll go over after. So who qualifies? Basically, anybody qualifies. NACA separates you in two categories. One is priority and one is non-priority. The people in priority are the people who make less than the median income in your area. Less money than that. Let's say in Los Angeles, the median income is $75,000 a year. If you make 75,000 or less, you're priority. And that means you can buy anywhere, any area, and you qualify for 1% less interest than the rest. Now, for the non-priority, if you make more money than the median income, let's say you make 100,000, 200,000, there's no cap, there's no limit. You make a lot of money, more than the median income in your area, then you're non-priority. You still qualify, but you qualify for 1% more than the priority people, which will be the same as the national average. You wouldn't get like an extra higher interest rate. It will be the same. And you are limited to buy in areas that are lower income areas or that are below the minimum income areas. In Los Angeles, a lot of areas qualify. There is a process you can do before you see a house to see if it qualifies. A lot of them do.
Got it. Is that same requirement of lower income areas that apply to the priority people or
No,
only to the non-priority people?
only to the non-priority people because they will make you buy in priority areas. But if you're priority, anywhere.
Got it. And when you say that they can purchase with 0% down, did you say 0% down?
0% down. Zero money down.
So what's the catch? Is it for first-time home buyers?
Yes. It is for first-time home buyers, but as long as you don't have a property on your name, you qualify. Let's say you owned a home 10 years ago and you sold it, you qualify. If you own a home right now, you're going to sell it. As long as you close your property before you buy the next one, you qualify. And it is 0% down. The catch is it takes a long time. It takes effort, but it's worth it. There's nothing that is like, well, but you do pay. No, no money down.
Got it. And then is this like a nationwide program or is this like a state of California program? Or
It is
what is
nationwide.
this program?
Nationwide.
Got it. So basically there's different areas that would qualify for this.
Yes. Yep.
What about the ratios? Like, meaning like if you're buying with 0% down, is it similar to like FHA ratios? Is it similar to conventional ratios? Like in terms of debt to income, are they
Yes.
more lenient? Are they more restrictive?
It
How does
is
that work?
restrictive. It is 33% debt to income ratio. If your finances are really good, like let's say you have really good no debt and stuff like that, they can help you increase it a little bit more to maybe, I know we qualify for like 34%, but that is your ratio. But if you buy multifamily, they count the rents towards your ratio.
So tell us about that. You actually ended up purchasing a multifamily, right? Tell us a little bit about
Yeah,
what you ended up doing.
yes, we ended up purchasing a triplex. We were looking for a duplex, a triplex, a fourplex. You qualify for up to 4 properties. So same, it has to be owner occupied. So 4 to be personal use. So we qualified for a triplex. We paid 0% down. Our interest rate, we bought it in April 2021, we closed. So our interest rate was 2.25. It was very low. And they also pay for your closing costs. And not only your closing cost, the seller's closing costs. So it's a good incentive.
Really?
Yeah, it's a good incentive to get your offers accepted. If you're an agent that wants to make offers on a NACA loan, people are like, what is this? I never heard of it, or I've heard of it and I don't like it. Well, a good incentive is your seller is going to save money on closing costs, thousands of dollars. They pay the city tax, the state tax, escrow fees. So, yeah.
Got it. And then are these loans like 30-year fixed loans or are
Yes.
they different in any way, shape, or form?
They are 30-year. So they have different ones. They have three different ones. They have 15, 20, or 30. And each
Got
one of those, the interest rate is a little bit different. So if your priority for a 30-year loan, you're right now the interest rate is 5.875. I just put an offer for one client. Basically, they have 1% less than the national average. If you're 20 years, the interest rate goes down.
Where does this money come from? Like, or is like, where did this program come from? Like, what's the history of it? Like, how come it's not as common? And you know, it's funny. I actually have a listing in Los Angeles on a multi-property on a 4-unit, and I just received an offer from a NACA loan, basically. So I'm glad that we're having this episode right now.
Yeah, and also let me know because I'm looking for a fourplex for a client. So
Yeah.
yeah, so basically it started because of predatory lending. So the main guy, Bruce, the one that started the whole program, he wanted the housing market to be fair for everyone. So he went after big banks that were doing predatory lending, Bank of America, Wells Fargo. He went after a lot of people. And he does a lot of advocacy and a lot of campaigns to help people. So they settled. They got an agreement, and actually, it's a conventional loan bank backed by Bank of America. Bank of America made an agreement with NACA to provide the funding for the NACA loans. So basically, you get qualified through NACA, pre-approved, and then Bank of America is your lender, your mortgage company.
Okay. So basically, like the money comes from them, basically, in other words.
Yes.
Got it. Okay. Now here's a question that I had because the fourplex property that we have, it's actually a fixer.
Mhm.
Like, how does NACA look at properties that need work, especially in the multi-unit space?
No problem. So NACA has a program called HAND. They have their own department. Let's say we went through the HAND department. So our property was a fixer. The seller didn't want to do any. We try, as the agent has to try to get credits. The seller was like, nope, as is. NACA then goes in, you show them your inspection report, and gives you a list of required items and suggested items. So the list and required items, you need to either have the money to fix them yourself in your bank, or you go through the HAND program, which they will add a loan. Well, they will add that money to your loan at the same interest rate. Let's say our loan was 850,000, 855. Because we had a bunch of repairs, our overall loan with the HAND department was 900,000. So we financed $45,000 for repairs through NACA,
Got
same
it.
rate, everything.
How does the appraisal work in that case? Does the property have to appraise for the 900,000 in order for you to do that?
No,
Or it's just like, hey, look, as long as it appraises for the 845, they'll help you with repairs, basically.
yeah, that is separate. So it has to appraise at whatever you offer, whatever the purchase price, and that is extra. However, you do need to have that leeway in your loan and your debt to income ratio. Whatever you got
Income ratio. Yeah.
approved for, we got approved for up to, let's say, because it was a triplex and the rent, up to 900,000. If you still have that leeway between your offer and your approval, you can add it there.
Is there a limit to how much repairs you can do? Like, meaning, like, if it needs a new roof, is that like something that's like outside of the boundary? Like, is there like 100,000 maximum in repairs, or as long as your debt to income ratio is good, you'd be good on it?
As long as your debt to income ratio is good, you'll be good on it. I think there is a caveat, and it has to be six. I'm not 100% sure. There's a percentage of the purchase price. I think it's 65% of the purchase price, something like that. Like you cannot go over. There is a limit, but it's big. We had a new roof. to repair in hours. But we added to a list of repairs. It was $10,000 because it was just one roof. But yeah.
Got it. So there's potentially a ratio of what's the max amount, basically. If you use the hand department program, does that mean that the repairs get done during the close of escrow or after the close of escrow?
After the close of escrow. So you close with NACA, you close everything, and then you start working with the hand department, and you bring a contractor that has to be certified through NACA. They give you a list of people that work with them. You go over, you do the repairs, NACA signs it off, and you're good. And there's another caveat. I don't know if you want me to go. It's in depth. If let's say the house was in such bad condition that you cannot move in, NACA will then allow you to get it done 6 months without paying a mortgage for 6 months. But the caveat is they will add those monthly payments to your total loan. I don't know if that makes
So
sense.
basically, like almost like at the end of the loan,
Yes,
not
yes.
your monthly payments won't increase.
Mm.
Instead of owing 360 payments, you owe 366 payments, basically
Yeah,
at the end, basically
yeah, something like that. Yeah.
something like that.
So if you're
Got
not
it.
living in
Okay,
your
that's
in the
excellent.
home and you're renting, you don't have to make two payments, basically.
How long does it typically take? One, to get pre-approved, and then two, how long does it typically take for the close of escrow time period? Is it like just a standard loan, like 30 days, 45 days?
Yes. So to get pre-approved, it depends on each person's circumstances. The perfect circumstance is it will probably take you 6 months because you have everything that's required. So basically, they give you a counselor. They are coaching you. You're like, I don't know, I've never bought a house. These are my finances, these are my documents. And the counselor tells you, you're never denied. You're always approved, but it might be not yet. Give me this document, get this in place. So for us, because it was right kind of during the pandemic, it took us 2 years. So you hear it and it's like it's a long time, but how long would it take you to get a down payment on a $800,000 home? So it's a long time, but it's going to be longer if you have to save. So it is worth it if you are on top of it and your documents are on top of it, and there's no delays. You can do it in 6 months to get pre-approved. Now to close, I've seen we closed in 35 days because the seller's agent was out of town and was delaying in sending us some documents. I have seen, depending on the property, that it can take up to 60 days, but it could be between 35, 45 to 60 days tops.
Got it. And then how does somebody get in contact with like NACA? Like, is it just like they go on their website, they fill in a questionnaire, or are there like specific loan officers that maybe if they reach out to you, you can connect them with like a direct counselor already, or what does that process look
No, you
like?
go to the website, they have seminars. I think they still have virtual seminars, and they have in person events. In some of the in-person events, if you have all of your documents, all of your ducks in a row, you can get qualified at the event. They call the dream event. So, but no, go through the website, NACA.com. If you have any questions, if contact me, I'll answer any questions and I'll guide you. But in their website, there's a section when you can see events or workshops. You have to go through one so they can give you your ID so you can log in and create your own information. And from there, they will connect you with your counselor.
Got it. Do you have to take a class in order to qualify for the NACA?
Yeah, you go through their workshop. Yes, it's just one day. Either you go through in-person event or virtual, the workshop. It will tell you everything, the backup, like how
Yeah.
it started, why are they doing this. And if you do want to do multifamily, you have to take, it's free, a course, a little certification. It was like one day for a landlord certification because you want to get multifamily.
I love this. And then, is there such thing as you make too much money in NACA? Like, let's say you're a first time home buyer, but you make like 500,000, are you disqualified automatically because of the amount of money that you have?
No, you just have a restriction of where you're gonna buy.
You would just go non-priority basically. And
Yes.
then how does that get determined? Like, let's say I'm non-priority. Like, is there a website that I can go on that determines like, okay, like these are the areas where you would be able to buy? And if so, what's that website?
I think it's the FEMA. No, not FEMA. I'm not sure what the website is. It's you will check the MSA. I'm not sure. I blanked on that website. I can send you the link. I can look it up and send you the link. There is a website.
Yeah.
You put the address and you check all of the data. It's like a government website. Check all of the data and it will tell you if it qualifies, like 85% or something.
Basically, you're looking for like low income
Yeah.
areas. At least that's what it sounds like.
Yeah.
Lower income
Mm-hmm.
areas, basically. So they're looking to reinvest into those areas, or they're looking to help people that have smaller incomes.
Yeah.
Let me ask you this: like, how long is this program going to go for? How long has it been around? Like, are the funds going to run out like next year? Or is this something that needs urgency?
No, it's not urgent. Well, you never know what can happen, in the world. But it's been around for a long time. I want to say 50 years or something. It's been years and years and years. It's not known. Like we didn't know either. Somebody told my now husband at work. He was like, "Oh, because we were looking for a house." And like, "Have you heard of NACA?" It's like more word to mouth. And if you find an agent and tells you, no, you don't qualify, or no, NACA is not good, don't listen to them. Go find somebody else. Because a lot of agents don't want to work with NACA. It's a lot of work. They will tell you, oh no, it's not good for this area. They don't have it in this area, and it's a lie. They do have it.
How much more work is it for an agent? Like from an agent's perspective, the only thing is it would take longer. Basically, like instead of getting qualified in a week, you're gonna basically get qualified in 6 months. But still, it sounds like it's a complete benefit to people.
It is. And I just don't know why a lot of people don't want to work with NACA. It is that. It's time. It takes time. And during the escrow process, you do have to be on top of the counselor and be like, hey, do you have this document? We need this. How is the underwriting going? But I guess it's worth it because you're helping people close that wouldn't normally qualify. You're getting more clients anyway. So it's a benefit. Do it.
So basically, like they're not as responsive as somebody who's making a commission, basically on it. The loan officers or the mortgage counselors,
They
basically.
are overworked,
Um,
so they have a lot of people. So one counselor can have 100 people, but they will give you priority. If you're under contract, then their focus shifts onto you. But it does take a little bit of time and a little bit of like, hey, where's that document? Hey, give me this. And also, I guess
are, it,
getting your offers
uh,
accepted is hard because a lot of people don't know about NACA.
yeah. Are there like additional documents required as part of the application process, or is it like similar underwriting to something?
It's similar.
To basically,
Yeah, similar.
what's the credit score? The minimum credit
There is
score
no
that's
minimum
required?
no minimum credit score because they will counsel you. So let's say the number doesn't matter. What matters are your collections, your debt. So if you are in collections, if it was over 2 years, they don't matter. If you have recent collections, they will help you to, okay, you have to pay them, get current. That's why sometimes it could take longer because you need to work on those things. But no, the credit score won't get you any better rate or worse rate. You still qualify.
So what happens if you have like I don't even know if this is possible, like a 485 credit score?
It depends. The
It doesn't
number
matter.
doesn't matter. It matters why. So why do you have? Are these collections active, or do you owe this? Okay, pay those. Go make those payments. And you do have to show a payment shock, which means what you're paying. Let's say right now I'm paying in rent $2,000, and I qualify for a $2,500 mortgage payment, including the whole thing: principal, interest, mortgage, and insurance. Your whole payment. You would have to show that you can save that difference, $500 every month until you close, because you need to show that you can afford. Their main thing is getting you a home that you can afford that you're gonna keep. They also have a program. If you already own a house and you're about to lose it, you cannot make the payments. They also help with that, but that's a whole different thing that I don't know about.
Got it. Okay. And then just to clarify, multifamily properties, like up to 4 units are available. Single family properties are available as well too. Are there any additional fees like the appraisal? Like who pays for the appraisal? Does NACA pay for the appraisal, or do
NACA
you as a consumer pay for the appraisal?
NACA pays for the appraisal for the closing costs. You only pay. You can buy down the rate. Let's say if in order to qualify, you need to buy down a few points. You can do that. So that's the only money you would put if you want to. If you don't want to, you don't put anything. And you do pay for your own inspections, but that's it.
What about co-signers, like non-occupant co-borrowers, basically?
No, I don't think you can do that. But let's say they do need to live in the property. If you're gonna apply together, you can apply together, but they need to live in the property. Or if somebody lives in the property but does not qualify for the loan, you can apply together but add them as a household member. They'll just know their information, but they won't qualify for the loan.
What about like mortgage insurance?
Yeah.
Does it have mortgage
No, you
insurance?
don't need you don't pay PMI even though
PMI.
you didn't pay the 20%. No mortgage insurance.
Got it. So it's basically like almost like a VA loan, like a 0% VA loan where they pay for all your closing costs. It just requires a little bit of education,
Mhm.
and it requires obviously a process that you're going to have to go through. The mortgage process is probably going to be a little bit more hands-on, but
Yes.
the benefits are tremendous. If you make less than the median income, you could get 1% less. And if you don't, then you would obviously just pay the full market rate basically at that time. So what would be the benefit? The benefit if somebody is non-priority, the benefits that they can go with 0% down basically, right?
Zero
That's the benefit
zero
to them.
percent down and no PMI.
Got it. Anything else that you think would be helpful to our viewers that they should know about the NACA program?
The only thing they do charge is $25 a year to help like with the I don't know, the cost of something. $25 a year.
Yeah.
And you do have to participate. So they want you to be part of the community. Let's say if they have events, you can go talk to the event. That counts as your participation after you close. So that's the only thing. And what you need to know is make sure you work with an agent that knows about NACA that can um, advocate for you when writing your offers, because again, a lot of like you receive the NACA offer, you're like, okay, I don't know if I want to accept it or not. The way I write the offers, I always talk to them on the phone. I tell them how it goes, like the process. Some agents, when we were going through the process, I wasn't an agent yet. We worked with one agent and she just couldn't advocate for us. She was like, well, they're not going to accept it, so we're not going to put the offer. Or they said no, but she find somebody that really advocates for you that knows the NACA program.
I love it. And you know what I like about you as well too is that you've actually been through it yourself. So whenever you go through something yourself, it kind of gives you that like firsthand experience as to like
Yeah.
you're going to ask a lot more questions a lot of the time. So that's what I like about you. So if people wanted to get a hold of you, Ivonne, where could they do that?
They can find me on Instagram at Ivy Navarro, or they can shoot me an email at Ivonne@IvonneNavarro.com. I can send you the links and any questions, even if you haven't gone through the program. If you want to go through the program, ask me. I can send you the link and I can guide you through it.
Got it. So I want to say thank you, Ivonne Navarro, for taking the time to come on the show. For our viewers out there, we had Ivonne Navarro. She's with Rise Real Estate. This is another episode of the Morales Group Show. Our mission is to provide value and to educate people on all things related to real estate. If you've enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode will be helpful, make sure to hit the share button. Once again, thank you so much, Ivonne. And to our viewers, until next time.